Time to say goodbye. Paesi che non ho mai veduto e vissuto con te. Adesso si.
All right, that's enough of that. Welcome to another daily edition of Stock Market Mutterings Trade Review and Recap for the 16th of November. Yes, it is time that I say goodbye, but only to daily stock market mutterings. I said back in October when I would do this that I would give it a shot for a little while when the viewership just isn't where I want it to be, and it's a lot of work combined with the room and trading. So I'm going to do this because a lot of you have been asking about the happy hours. So let's talk about the good. Let's just talk about the good because number one, we're going to bring happy hour back. And I think a lot of you liked happy hour, and that's what we're going to do. So we'll start going back to doing happy hours every week and a lot more of the educational content with things like whiteboard. And to make up for that, I also want to put in some chart study at least one day a week. So the plan right now going forward, rather than doing the daily market mutterings, is to add one educational chart setup video per week, a whiteboard, the happy hour, and then of course on the weekend I'll do the stock market mutterings on the weekend. So cutting it back just a little bit, just taking it down somewhat so we don't have to do this every day. Now, that's in the past. We're going to move right on forward. So happy hours, stock market mutterings only one time a week, and we'll put a little bit more educational content in there for everybody. So let's talk about the trades and how we finished the week. It was green again, which is nice. So after just the first couple of days, like the first 3-4 days of the month was really bumpy and stuff like that. Remember we talked about that big bull market rip, got stuck in wind, got stuck in IBM. And, since then we've put together a pretty good streak of trading, and we've just kind of been getting back to what it is that we do best, which is looking for these vert shorts and looking for some of these, reversal trades. Now, I've been talking about that a lot this week. That trade has worked out real well. So I kind of want to go over that again because what I'm allowing to happen right now is letting the market play into my hands, letting the quick sell-off of the market, the quick pullbacks that the market offers in the morning as a chance to take advantage of some of this stuff. So the first one that we were looking at today was Goose. The Goose was on the loose. Now this thing starts ripping up here. There's two areas that I want you to look at. One is the daily chart. So at one time this thing was pressing up here towards the 71 area. And that was the high, the very top highs from after reported earnings. So once you start seeing that thing kind of go vert in the morning and just kind of grinding up, that's our plan, is to start shorting with a feeler or a starter size and then work off of that upper resistance. Now some of you say, well, why don't you just wait until you get all the way up to the top side of the resistance and go there? Well, there's probably 60 to 70% of them that fail before they make that move. So let me show you what I'm talking about. Really customary to see this in the market is a good 20-30 minute move or a good vertical move or a really strong move, and then it tapers out. Now we talked about that yesterday, whole numbers and stuff like that, and look where this thing kind of slows down and then it pulls back. Then it makes a regear. So oftentimes that first initial pullback in this market has been pretty deep. We've seen stuff like Netflix, NVDA, and a couple others really drift down and dig into that early morning bullish action. So we like to start out with a starter, and if we get squeezed, then we're prepared for that. And that's kind of what I want to say to all the new traders out there. You're always going to have people tell you you're going to get murdered, you're going to get steamrolled or whatever it is. Remember, you can control your risk. You have two ways to control risks. You can either use stops or use position size, or I should say three. Use them both if you like. But remember, position size is the key in every single trade. You go into that trade, you assess how much risk that you want to take on that trade and how much you want to take right now. Maybe you're coming out of a few really bad trades and you just want to get a rhythm back. That's what I did at the beginning of the month. If you remember, if you go back to those early stock market mutterings when I said, look, 2 out of the first 3 days I've been red and I've taken a small beating here. I need to just cool it off. Just step back real quick. Remember, the market's always open. Here we are a couple weeks later. Things are just fine. You just step back, lower your size, get back into a rhythm. Then you start trading heavy again. So in this case, if you're prepared to go all the way up to the highs, then if it doesn't work out for you right away or you get squeezed a little bit, you've planned that out. And as long as you plan that out, as long as you plan out your risk, there really is no such thing as a bad trade. Like I've said before, if you use a stop, you use good risk management, there's no such thing as a bad trade. So anyway, this just kind of fatigued right before, I mean, just right before it got to that high. I think it was like 72 and some change up there. So it gets up in towards the mid 71s. And then, you know, I added to that position and then down it goes. Now I covered as it was going down here because it had been pretty stingy. And even though this chart looks, this is one thing about me looking at charts, hindsight's 2020. The charts looked like this thing was just rolling down here straight, you know. And it wasn't. It was actually fighting tooth and nail with every single, like it was just pulling teeth trying to get this thing to watch it go down. I mean, it was just, it kept getting bought up on every little nickel drop until finally it got flushed out at the end. By that time I had covered up because I had some pretty nice size on that trade. So that one was good. Now on the flip side of that, we started to see, I think this might have been, yeah, that was actually, I think that was the second trade I think I took was Goose. I think the first one was Facebook. Yeah, it's Friday. What are you going to do? Again, it's the same thing that we talked about. I've been repeating this over and over again, and this is what I wanted to, when I did these market mutterings, is talk about, you know, what do we see in the market? What is it that we see differently than someone else? You know, what does a pro see different than someone that's just getting started or that's average? And there are just, it's not that we know a lot more, it's just there's different things that we do. And this is one of those things we talked about. What do we say the last couple of days? Like with Lulu, range. Range is important. When you get down to a certain dollar amount, an abnormal range, minus earnings or PR, then you can expect a reversal. Again, we have Facebook just dumping, just dumping. I mean, for some reason, they just decided to pull the rug here. And of course, people are selling off this thing. They're in fear. They're in panic. They don't know what's going on. So they want to sell now and ask questions later. But then when you look at it, it's like this thing went down. I think it was $5. You got 142, you get to 130, about, I think it was about $4 or $5 on Facebook, if I can, memory serves me correctly. So when you see that, you're like, how many times has Facebook opened up -5? We're only like 15, 20 minutes into the day. How often do you see that? And it made a nice spike, and then it actually re-geared and come up out of the flag. Now, I like to do it based on range, and I like to do it based on, you know, RSI and a couple of other things, support, resistance. You can always wait, because it's up to the trader, but one of the things that we like to do is just start going in with feeler sizes, like I say with Goose. Same thing with Facebook. And that way, if you know, because I don't want to try to say I'm perfect at timing the exact bottom or the exact top of a stock, because I'm not. So I like to use a partial position. And then if I get pushed around a little bit more, I've left, you know, some bullets in the chamber, so to speak. Now you can always wait. Like in this case here, when you get a little bit of green, you can just go in on the first green bar. I use a 5-minute chart and just put a stop down at the low a day. You know, I mean, yes, you'll get stopped out a lot, but you won't risk very much in those trades. And really, if you do this thing, the thing that's also important that I may not have stressed about these reversal trades throughout the week is that they work best in the morning, because again, it's not the big difference between a reversal trade is it's not a trend. It's a piece of emotion. Again, we talked about that with the blow-off tops with Lulu, back-to-back days on that. You have blow-off bottom here in Facebook. You had a blow-off top happening, a really small blow-off top happening there in Goose. But the emotions are so heavy. And remember, all these people are just, try to put yourself in this situation. Everybody is thinking overnight what they want to do, the moves that they want to make. And then they're aggressive and they're hungry and they want to finish off the week well, you know. It's like that thing they say with gamblers, that what's the biggest gambling day is Monday, because everybody lost on Sunday and they're trying to make their money back on Monday Night Football. I think I heard that somewhere. If not, I just made it up. No, but I did think I hear it somewhere. So remember, there's a lot of emotion, and that's what we're trying to do, is take advantage of that emotion. So you're going to get those wild, erratic moves, and this is what happened. So it was back-to-back. And pretty much from that point, the day was good. I mean, it was good from that point on. We really didn't need to do any more trading. And I don't think I did. I don't think I made another trade again. I had some options that were expiring. So it turned out to be a really nice Friday. So when you're looking at these, again, remember that about 80% of this business, maybe even more than that, is mental. It's based up here. And the other 20% is strategy. And I've gone over this so many times. I've said this same thing before, over and over again. So if that's the truth, and I think most of you that traded will say, man, this game is all mental. Because you come into it and you think, someone's going to show me a strategy that's going to change my life. And maybe they do, but it's not as easy as it sounds, right? It's easy to look at charts in hindsight, draw a bunch of lines, and look at Fibonacci cycles and all that kind of stuff, and come up with strategies. It's easy, but when you're trying to do that in a real-time environment and you've got real skin in the game, the market starts playing tricks on you with these wild moves. Like I showed you on Goose, you know, the thing with it is, yes, I would have loved to have held that trade longer. And when you're looking at the chart, this is where charts kind of lie. I can't even see it on my. This is where charts kind of lie. Yes, this thing is still going down every 5-minute bar. But it doesn't feel like that when you're in it, because everyone it keeps spiking back up, and then it sells off. It keeps spiking back up, and it keeps selling back off, and it keeps spiking back up, and then you eventually it's like, man, I can't deal with it. Kind of like Netflix yesterday, where I said, man, you can go to 300. I don't care. You're ridiculous. Your behavior is nuts. And that's what trading is. It's all emotional. So the question that you have to ask yourself, that I ask you, is if trading is 80% mental, 20% mechanics, or 20% strategy, then why are we always wasting our time trying to find holy grail strategies, trying to find scanners, trying to find all this other stuff, when the real true culprit of losing trades and the real thing that needs to be worked on is us. Right here. It's us. So when I look back to my amateur days when I was struggling 18 years ago, 17 years ago, and you say, what was the difference back then to now? Yes, I have more understanding of the market. I have thousands of hours of screen time. I was naturally going to get better at my strategies. But I'm kind of doing the same thing. You know, I kind of had the same feelings about the market when it came to strategy. Like I haven't learned anymore. Like I've never really learned what floor pivots were over that time, or the proper use of a MACD. You know, I just learned from repetition and doing, and just saying, you know what? I know what's going to happen. So think about anything that you're doing in life as well. Like, you know, just driving a car to work. You know, after you do it for 10 years, you're like, I know exactly where there's going to be a traffic jam every day when I go to work. I know just how long the line is going to be at the bank, how long the line is going to be at Starbucks. You know, you run the same routine every day. You know what to expect. And that's the same thing. So when I'm saying this, I'm talking to the new traders, aspiring traders, and struggling traders who haven't figured this out yet. The real success in stock trading comes from just screen time, just constantly doing the same thing over and over again. And you'll eventually figure it out. That's why the name of the game in the beginning is survival. If you can survive and you can stay in this long enough, you'll get it. Regardless of what you've done before, you'll figure it out. You just need enough screen time. So I'm going to leave it there. I want to keep it short. This is not the last stock market mutterings. Just the last daily stock market mutterings. We're going to do them every week. I'll do a weekly recap of all the trades that we've taken in the room, and I'll keep doing that. And then it'll be better. We'll do the happy hours and all that good stuff. But remember, as you're looking through these trades, you know, and you're trying to become a trader, and you're looking at reversal trades as a possibility, remember there are certain levels that you need to be paying attention to. You need to be able, in any case, to separate the euphoria of people and the fear and euphoria with logic. You know, you need to be able to do that. You need to be able to see these levels. You need to be able to manage your risk. You need to have a plan A and a plan B for every single trade. If you do that, you will be able to survive and eventually make a pretty good living as a stock trader. So anyway, guys, I want to thank you for watching these videos. As always, if you need help, reach out to me, support@thelincolnlist.com. I will chat with everybody next week with new videos, new happy hours. Yes, that ought to be nice. So until then, thanks for watching. Take care. Chat with everyone soon.